Today with me. Don't leave when I leave. We've got Chris Pulver coming to take over, and I'll speak to you all very, very soon.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. Happy Wednesday. Welcome back. Hey, let's go to a 15 to 30 minute time frame here. And everyone's wondering what's up with this melt up, right? I did a poll yesterday on my Telegram channel, and seems like, okay, here's my question. S&P hits all-time highs or U.S.-China trade agreement gap filled? Right now, the poll shows about 71% of everyone thinks we're hitting all-time highs. So I'm just going to let this poll run for the day. I'm curious what your thoughts are too. We asked this yesterday. I think right now, based on this current structure that I see, here is a 30-minute time frame. If you just simply connect the lows, this might be stupidly simple, but if you connect the lows in this market, do you notice that these bulls have stayed intact? Yes or no? Look at this trend line. All I'm doing is connecting the April 7 low with the pullback low. That was that like Monday pullback level, and connect point 1 to point 2. And that has propelled this market higher and also provided this barely like this like just sliver of support where this market's just grinding higher. But I don't think it's going to take much to turn the corner. The question is, will we turn the corner, right? Look, today's Wednesday. Guess what happens by Thursday, Friday? By Thursday, by Friday, unless we are going higher to move further away from this trend line, if we go sideways today, Thursday, Friday is the window where I would say, look, this market might start to have an adverse reaction to this. That makes sense? So anyway, keep an eye on this trend line. I think we should watch it. I'm going to go to a 4-point here to make it a little bit more noticeable. And if the time breaks it or price breaks it, two things, right? If we break this just based on sideways price action, well, that's time. That's not really a catalyst to me. But if we have lows that are then breaking down, then sure, we're rediscussing gaps to get filled, previous levels of resistance, and maybe we have a pullback. So again, what are your thoughts? We hitting all-time highs first, or are we going to pull back first? Either way, it's like it can disappoint a lot of traders, right? We go to all-time highs. Everyone that missed out on this dip is going to be disappointed. If we have everyone that's chasing all-time highs and it doesn't get there, everyone that's chasing all-time highs that got in late is going to be disappointed. So it's kind of an interesting situation for the market to cause some pain either way, and it's kind of what I like. In a way, it's like it just gives opportunities, because I'm hoping if that the all-time high chasers are or the bag holders here at the highs, it's like I just like to see a pullback. So anyway, we'll see what happens. Grabbed a few bucks today. We got a big level on the 6,000 handle on the SPX. So I wouldn't be surprised to see us hit 6,000 today. Markets seem to still be moving. I got out for a break even on a bull put spread, took some profit on an iron condor this morning. Here is the trade. So this is now trading for like 60. Yeah, that was up about 20 to 30 cents now. And this one is down to about $1. So yeah, about 50 to 60 cents on that one. So yeah, so far, it was just a chop fest this morning, which I was kind of happy with. ISM numbers came out better for services. That was the 10 o'clock news day for the U.S. Bank of Canada, did they cut rates? They didn't. I thought they were cutting rates this week. Wait a minute. Huh. Okay. I thought they were cutting rates. I thought ECB tomorrow and Bank of Canada, I thought they were cutting rates to 2.5. Am I like sniffing glue here? Did that happen? I swore I looked at the like Sunday Forex Factory calendar, looked at Monday's trading, like we had a 50 or 25 basis points cut. Huh. Anyway, and oh, okay. I looked at this incorrectly this morning. The ISM numbers, we actually had a sub 50 print for the ISM services. But the market doesn't care because we're right back up where we started. If you look at price action this morning, this was your reaction to the 10 o'clock news. And 5 minutes later, it's kind of bottomed out, filled the gap. And then here we are right back where we started. So we're above the news candle. I'm telling you, I think 6,000 is likely going to get hit. I've got a pin around 59.90 right now. I'm surprised that thing hasn't taken profit yet. I've got an SPX double up here. I mean, I'm showing like 80 to 100% profit. Let's go. Just give me my trade fill. So dumb. Sometimes those like, it's probably better off if I did like a 10 wide versus 5 wide. Anyway, I'm trying to get a double on the trade. So we'll see what we get. So, I mean, again, correct me if I'm wrong. I could have swore this week on like Monday that the Wednesday Bank of Canada outlook was to have a 25 basis points cut. I know the ECB is supposed to cut tomorrow. So they're looking to cut another 25 basis points. Currency strength today, what's going on? So dollar weaker. Cool. Haven't seen that before. Dollar weaker. Japanese yen is starting to creep its way up. Dollar yen is now near the top of the food chain. Swiss has been Japanese yen Swiss. You can see how they're moving in tandem. So not a ton of volatility, right? 30 and 45. So not a ton on the vertical axis, but dollar is slipping weaker today. All-time highs are within just a couple of percent. 2.73% from all-time highs on the SPX. And we've got to be even closer on the Nasdaq, 2.4%. The Dow, I think, is still around 6%, 6 or 7 maybe. About 5.9% to the all-time highs. Russell is still double digits. So in 2024, I had quite a good catch-up trade in the Russell, and that was pretty lucrative. This one, I'm not really taking the bait. We're 17% from the all-time highs. I don't know if the market's going to get what they like. I don't know if small caps are going to catch up. I think we're back on the coattails of riding MAG7, riding large cap again, large cap tech. But we do not have the typical leaders in like a healthy bull market when it's led by utilities and it's led by consumer staples, it's led by financials, it's led by industrials. Like that's an interesting rotation for a bull market. I think we might be on kind of the, I don't know, the edge of a bull market, the final final legs of a bull market. But I guess it depends on this whole like beautiful slash BS spending bill, which is really not a tax cut, but more of a tax extension and a way to still do what the government does best, which is spend a bunch of money, raise deficits, and just spend and print to oblivion. So eventually, I mean, that's what I said yesterday. Gold and Bitcoin, good diversifier. Silver's been performing well this week. So let's take a look at those. So let's go dollar index. 98.85. This should be helping my euro dollar position. I was hoping that euro dollar going into tomorrow's trading. So going into tomorrow's trading, can I get my euro dollar to spike up to this 1500, 1550 zone? I'm looking for a profit target there. I'm still up about 230 pips on the euro dollar trade right now. Let's go other dollar crosses, Aussie dollar. I don't like how this is behaving, although this is open space. Is anybody long Aussie dollar? And if so, what are you doing? Are you long here and then still wanting to buy in at a lower level? Like that's what I would be positioned for, would be Area 1, Area 2, stop loss below lows. Open space trading up to like 6,900, 7,000. So it's not a bad spot. Euro dollar we did. Pound dollar still grinding higher. I don't like this one as much. I think euro dollar is a cleaner trade. New Zealand dollar also kind of the same thing. You know, had one pullback here at 58.50, and that's it. I'd like to see another pullback if possible. Can we pull back to 58.50 and then trade some open space? Area 1, I still like this kind of area 2, stop loss below. Profit target 63.50. Dollar CAD sliding lower. Okay, so what I'll be looking for here would be, I'll just draw a trend line. There's no reason to buy dollar CAD until this trend line breaks. If that is down here, cool. If it's earlier, okay, then I'll look for something on the backside of the trend line and then maybe use this area as my chance to buy support. Oil's been moving up a little bit though, yeah? A little bit. Oil's up just a little bit. If we get above $65.50 or $66, are we coming back up into, the 200 moving average? It's been a resistance point, fake out, resistance point multiple times. But it's still stuck between the 65 ceiling and the 55 floor. Natural gas, UNG, just I've got a $17 call as part of my diagonal spread. So I want to make sure I don't want that called. Well, I don't want that assigned because it's just a sell call, but it's a spread. So I need to make sure that if it's above 17, let me set a chart line here. So if we're getting above $17, then the diagonal spread close or roll. So I'll either roll it out for more time and more credit, or I will close the whole thing with like a 5/17 and close it out. So I've got to, let me see what my overall debit is. Overall debit right now is $9.78. So if I got a $5 plus $9.78, $14.78, get a call away at 17, I make $222 on about 1,100 contracts. So make a few $1,000 if it's is greater than 17. But I could also still roll it. Okay, gold. Cool. Consolidate. I want to see gold consolidate more. I still like gold long a lot, actually. Not as much as I like silver, but I think gold just is going to give us a chance to accumulate more. I think traders just have to be patient, which is probably hard for many. But if we just come up to, I mean, we are kind of breaking this level here. So I wonder what that looks like. So I will say this, if the dollar index, if the DXY breaks the lows without showing really any signs of stopping, gold is likely going to benefit from that. So I think right now if the dollar stays range bound, so too will gold. And that's obviously going to be, what's the U.S. bond market doing? What about TLT? What about yields? But if the dollar stays relatively calm, choppy, sideways, I think gold's going to do the same. Speaking of GLD, I looked at this trade yesterday. Did we talk about it live in session yesterday? I think we did. I was looking at a trade here like a 265 and maybe have a profit trap. Let me see if I can get that trade to work out. It might require like 200 shares of GLD, which I don't really love, but let me have a look. Also, I want to take a look at MicroStrategy. We're at 377. So if I bought shares, it would be for a couple of these accounts, like this account are new. I've had these for only a few weeks. If I want to get a position going, I might look at a trade on MicroStrategy just to generate some income. So I have shares of MicroStrategy in. Actually, that's a new one too. I take that one for a little income. These accounts. So these three already have shares of MicroStrategy. I might add in a share. So let me take a look at this. So if I price this out, if I buy some shares right now, I want to see if I went out to maybe next week and I just sell it at the money. So if I want some price appreciation, I can, sell it. If I'm looking at, let me flip this around. So we're trading right now around 377. If I sell, let's say a 382, okay, so I go from a 377.69 down to about 367. I could also have a put in here. So if I do a collar trade, and in a trade like this, it's volatile enough, like I don't want to just sell a call, right? That's way too much of a drawdown potential. So I think I have to have a collar trade on here. I'm probably better off doing something like 30 days out. Get a little bit more premium, go out like 29 days. That gets us into July 3rd. Holiday trading, July 11th, maybe. I mean, fudge it, might as well go out 45 days. Okay, so if I wanted some at the money love, then I get, $3,000 for a 380 covered call. So I take a 377 purchase, I lower it all the way down to 347. If it gets called away, I make like $3,000. That's a good trade. Okay, now I'm not going to keep this full income because I think the smart thing is in case this price drops, I've got to have something to protect. So if I sell the 380, and let's say on the downside, maybe I make $1,000 on this trade. So I buy the 350. That's not bad. I mean, that's still a pretty high delta. Let me go like a 20 delta. So I can make about $1,800 on this trade. Still have some protection to the downside. My break even would be a 377.80 minus $18. So I mean, my break even's 360 on the trade. If it goes down, I can also use this like $13 debit, increase that. So maybe I lower the cost basis a little bit lower. But if it gets called away where price is higher than 380, I'm making $2,100 on the trade. And I could do that in 44 days. Possibly. So I'm going to kick that around for a little bit. That's a bit of a campaign trade. I keep saying this. I'm looking for income opportunities. To me, this is one where it's like I'll allocate the capital. It's going to tie up around, at most, if it's just a cash trade, it's going to tie up around $38,000. But if I could generate around $2,000, so make around $2,100 out of tying up $37,000. Oops, it's good math. 2,100 divided by 37,000. So make about 5.6% on this trade. Like, it's not a bad trade. So it's just income. Just move the needle a little bit. P&L year to date for 45 days. If we have a big shift to the downside, I can adjust my collar. I can take profit on the call side. I can take profit on the put side because it's a sell call for income. It's a buy put for protection. And yeah, I know it's a volatile stock, but overall, I mean, this is a big area, right? If MicroStrategy holds this level, okay, great. If MicroStrategy does not hold this level, well, that's why I have to have a put. I think that's the most important thing is I can't let this thing slip where it's like, well, I'm down $130 a share now. That's unacceptable. So I want to make sure I have some protection to still generate that pretty solid income because the premiums are outrageously good, but having protection is going to be key. So I'm going to write that one down. So MSTR. Okay, I'll price that one out today. All right, let's go back to gold and silver. Like I said, if dollar remains consolidated, so will gold. If silver is looking better and closer, I mean, come on, silver. Hi ho, silver. Get above 35. Let's see if we can break these highs. There's no such thing as triple tops and quadruple tops. There's no such thing as triple bottoms and quadruple bottoms. If this is going to break, this is open space. Even if I was conservative on silver, and this is a measured move, I'm just going to take this high, low, high, low. Let's box this in. Okay, I'll take this move right here. If we get a breakout on silver, the nice thing is this is the projection. I already have it based on a wave cycle. So if we break above 35 with some momentum, this could be a really good looking trade. Now, again, this is the destination, right? But how does it get there? Well, maybe it's a channel. So maybe we break above the highs, maybe we pull back again, maybe we get to the highs again, maybe we pull back again. Maybe this is the way that we get there, right? If that's the case, then we obviously have buying opportunities with higher lows. But if it just starts to run with some momentum, which you never know. I mean, if it runs with some momentum, cool. I'd be pretty happy at $41, but I would be thrilled at 45, 46, going up towards 48. That is the, all-time high. 48, we get back to the 2011 high, which is the same high we had back in 1980. So if it is destination $49 on silver, sign me up. I want to be a part of that trade, which I am. I've been participating in silver since all this chop back in like 2022 and 2023. This first swing in silver, I started to position the portfolio to have some exposure in there. So I'm still just kind of, enjoying the benefits of it, but hopefully there's a lot more to go. Bitcoin has pulled back. We're at 104. I've got some IBIT levels that I'm buying into. This is what I was mentioning here, just wanting to see some efficiencies. Pull back, possibly even offering full accumulation back to 75. But this whole idea of like, I found a couple interesting charts that I was sharing yesterday in talk. Like I was talking about these yesterday, but now I built them out. So here is the S&P 500 compared to gold. Okay. S&P 500 in dollar terms is up at all-time highs. S&P compared to gold is way down. Nasdaq compared to gold is way down. Okay. S&P compared to Bitcoin is way down. Nasdaq compared to Bitcoin is way down. I think we should wrap our head around this idea that it's nice to have assets like gold in your portfolio, silver in your portfolio, Bitcoin in your portfolio, because they are appreciating in value, right? To say that the US market is going up, it's like, you know what the real test is? If you have the US markets going up, okay, look at the increase in money supply, because it's pretty much the same thing. It's like a 1-to-1. So you're participating in the markets to essentially just tread water and break even, because you're, getting a debased currency, pair and loss of purchasing power. M2, global money supply, it's like kept things going. You're just kind of keeping pace, but you're not truly gaining. So again, I mean, I know that silver and gold and Bitcoin, even, it's like they have their drawdowns, they have their volatility, they have their risk, but I think if we give them a fair shake over these next 5 to 10 years, I think we'll be pleasantly surprised to see where they go. Like the world seems to be making a much more aggressive shift towards non-US dollar assets, and that's a big deal. Like that's a big shakeup for the US. So and the US isn't going down with the fight. The US will fight. We'll figure out something. Creative accounting. The whole world is tied. The whole world systemically, fiat system is tied. So it's going to eventually have to have like a reckoning. I just don't know when. I think the financial markets are too big to fail, but it could be very disruptive. And like I said, I'm not bearish. I just need to know that I've got protection. All right, let's keep going here. Coin, MicroStrategy. I'm probably going to grab some shares of MicroStrategy, add some income trades here. I think a good window for this would be try to participate in this through the holidays in July. Hopefully have no shenanigans like we had last summer. Like mid-July into August was a pretty nasty spill. But you never know. Is this market going to melt up to highs again? Is it going to pull back? It's just kind of, I mean, look, we really haven't gone anywhere for 3 weeks. Once we had that first flow through the US-China trade pause, it's right back at the same highs, but it's taken, 2-3 weeks just to go sideways. Okay. Any individual charts you want to take a look at today? So we got Japanese yen creeping up here towards number 1 of the totem pole. Swiss is in second. Aussie's dropping a little bit. New Zealand euro, but dollar by far like just getting trounced once again. Okay. All I'm saying on the dollar is just be careful from selling into these lows. If the dollar ends up breaching lows, that's okay, but that could be divergent. Just saying, like I wouldn't be selling dollar without having a very aggressive like trailing stop loss. Like if you're already in profit on, this pullback here, selling the dollar, cool, break even. If it hits the lows, trail that stop loss tighter. My euro dollar trade, if that hits the highs at 1500, I'm probably getting out of that thing, right? If we come back up here and tap, like I'm going to set a chart alarm at 1500 actually. So I'm going to go 1500. Okay, so if we hit 1500, that trade is good enough. I mean, 1550 is my profit target. It's right at that high. But if we hit 1500, I will take my 315 pips and say bye. Palantir, let's take a look at that one, Lewis. Palantir, I put on some ratio spreads on Palantir. I've got one out to the end of the year. I've got a couple trades in here. I'll show you. So Palantir. So I have I kind of constructed a trade here this last week. So this is a ratio spread that is already up around 180 bucks. And that's only about 35% of the profit, so there's still more to go. This trade ultimately should be about $500 of income. And then this trade is a 1111 trade. A 1111 trade, which gives me a trap. So the 130 by 125, that's a bear put trap. So if I make some money in that trade, that would give me about $300 to $400, and then I have the income side for another $250. So this trade could potentially pay me another 500 bucks. This one's going to take some time, but you know, I'm looking at it this way: if Palantir from 130 to 125, if it goes lower than that but stays above 60 bucks, okay, so basically anywhere in here, I make money, and I make about 500 bucks. So if it goes higher, I make $2.80. So I don't make 5, I make 280. Okay. So there's, I mean, and plus there's a lot of room for forgiveness here, right? Palantir could have a bit of a spill. You know, we could roll over a little bit. We could have some volatility. We can come back into the halfway point of this, you know, crazy range we've maybe been establishing. But you know, my levels are all the way down here. So we'll see. It's not without volatility. I know that. But I mean, Palantir has been getting a lot of nods as a, you know, awesome stock and doing all these fantastic things. Their valuation is like outrageously high. But I don't know. I wouldn't be surprised if Palantir is going to be, you know, maybe one of our bigger stocks. I mean, it's a $300 billion market cap. Is it possible that in the next 5 or 10 years this becomes $1 trillion? I mean, we could be talking Palantir and a handful of others that are now the new MAG5 or the new MAG7. It's just different stocks, different names now, right? If all of a sudden, you know, growth slows on Apple or stalls on the MAG7, or people are just rotating out of the MAG7 like they did earlier this year, Palantir might be one of those household names all of a sudden. So we will see. Sometimes with big money and you know, big money and big flows come big responsibilities and big problems. Ask Kathy Wood when her ARK fund, basically this ARK disruptive ETF. I mean, when this thing was ripping, this would have been back here in 2021, 2022, before the bear market happened, post COVID. Kathy Wood's fund was sitting on like $100 billion, and then it went bye-bye. Right. And now, you know, Kathy Wood and Jim Cramer have inverse ETFs based on their trade calls. Do the opposite and you make money. Like, that's unfortunate, but it was such a ridiculous move over a couple years. So, I mean, this is what happens when you get married to stocks. They do extremely well. They're you know, the belle of the ball for the portfolio, and all of a sudden then they're not. So that is why at the end of the day, if you want to see something long-term and sustainable, you got to love the company you're holding. And I think current MAG7s, like they've been some gems for a long time, but this is why you look to the indexes. The indexes are designed to benefit from the best companies in the world. So if Palantir takes the reins and runs with all-time highs and just can't be stopped, well, Palantir and kind of companies like that will still help the S&P perform better. So that's why I'm a big believer in just like having some index exposure, but also actively trading options around them so you can still generate the income and hopefully, edge out some extra gains. Make sense? Yep. So I've just got some like wide margin for error on Palantir, but I've got some income trades there that'll make me for these accounts probably. I'm not sure how many. Let me go to these accounts. I know it did. All my PM accounts did it, so I'll go 111 here. Group 1111. This one did it. 1111. This one just has ratio spread. Ratio spread. This one, I think I did both. Yep. Okay. Ratio spread. Ratio spread. So these last two accounts have it too. All right. So the way this will stack up is how many. So 250. That'd be worth 500. 250 is 750. Another 500 is 1250. Another 500 is 1750. 2250. 2500. 2750. 3000. 3500. 4000. 4250. 4500. 4750. 40 or 5000. 5250. 55. So 5750. So about $5,700 with just options, no ownership. If prices go my way, I've got about a 90+% chance profit on these trades. I'm going out plenty of time. We'll see. I mean, there's margin for error. I know there's volatility. The valuation's crazy. It's probably excessive, but doesn't mean that Palantir is not beloved right now, and it's been performing pretty darn well. Okay. All right. What else? We did dollar, oil, gold, silver. We did Bitcoin, MicroStrategy, copper. Is copper running hot? Not really. I'm hoping we still stay range bound in copper for my little lottery butterfly. Japanese yen. Yeah, we'll see. Chart line set at highs. FXY is how I'm trading the yen. So if we get a longer move on the yen of Japanese government bond yields, JGBY, what the heck's the symbol for Japanese government bonds? There it is. Okay, JP30. So the JP 30 year, peaked around 3.2. The JP 40 year peaked around 3.7. That's a big drop here. Wow. That's a big drop recently. This could be the blind spot in the markets for 2025. If we have another Japanese yen based event or another Bank of Japan based event, we'll see. I mean, this might be taking some of the power away from the U.S. dollar, and it's just the bond market. If we're looking at U.S. 10-year, U.S. 20-year, it's like 10-year yields are dropping a little bit. Okay, U.S. 20-year yields dropping a little bit. Interesting. U.S. 30-year yields dropping a little bit. Okay, a little bit, but we're still. This is what I keep watching as a benchmark. Liberation Day. We're not even close to it. We're still another 20 to 30 basis points away and higher than the Liberation Day announcement and that little, snafu in the basis trade. Okay, TLT making a freaking run. Good. I might be able to get out of my TLT trades. So my TLT exposure is just a diagonal spread, and I'm going to keep a close eye on this one. I think I have it covered at 89 right now. So TLT, Diagonal spread is a 65 by 89. So if we get above 89, I'm getting this thing called away. This should still make me a couple of bucks. I've got a lot of contracts here. This was a 2-year trade. I'm in these to January 2027. So I'm giving it all of this year into next year. I've got plenty of time to just sell the call side of this diagonal spread like every 30 to 60 days. But I'm also not wanting to have a ton of TLT exposure because I don't know how bullish this necessarily gets. You know, if we have like a little relief squeeze, that's fine. But I think this is maybe at best going to be a range. I think if bond traders are lucky, they see it go sideways and stay stable. But if all of a sudden we make I don't know, I think we could pop up here on a squeeze because we're sitting at pretty strong support. But I'd still say this thing is maybe range bound at best. So I'm going to try to let it go at range highs, give or take. So anyway, chart alarms are set. There's 89, there's 90. If we hit, 89, I'm looking at getting rid of that diagonal spread. My expiration is out to the end of this month. So if we get another little rally here, also it's interesting that if we see the bond market going up, if the bond market is going higher, does that also mean that maybe we're getting some? Is it just because it's so cheap, or are we going to see stocks go up and bonds go up? It's usually not the correlation. So anyway, something to keep an eye on for this week or this month. MAG7 still pretty sideways. I'd love a dip and a pullback on mags if possible. Apple still hanging in there about $200. Amazon same. Like these have gotten pretty boring. AVGO just ripped. This is overbought with divergence, so I wouldn't be terribly shocked to see AVGO have a pullback. Not sure what this is going to look like with a call trade, but the volatility should be okay. If I did, we have earnings on June 5th. Oh, I see. That's literally, let me price that out actually. I didn't realize we had earnings this week on Broadcom. I thought most earnings season was slowed down. So option slam, AVGO. So expected move is about 15 to 16%. It's a lot of single digits in there. And earnings is this week. Is that right? So this week, June 5th, that's tomorrow after the bell. Okay, well, let's see. I think I like this trade. It's overbought. I wouldn't mind selling some premium on this one. Maybe a broke wing butterfly, maybe a yeah, let me see. So it shows the average is about 15%. We're trading at 261. That's a pretty big move. I'll look at the difference between what their history shows. So 0.15 times 261. So looking for about a $39 move. And the broker says that we're going about $17. Okay. Well, the broker says by this Friday, 17 bucks. Okay. Well, let's have a look. So earnings on the call side, about 20 bucks. So unless this like blows higher, I'm going to take a look and see if I can do a call fly. Put this at the top of the expected move. So 275, 280, that's a $19 move. That's close. It's kind of flirting with fire a little bit there. But I would say if we get this trade to fill, this would be like a post earnings trade. That's not bad. I think this credit is garbage though. I would try to take this trade if it fills for maybe. This is going to be a hard fill, but if I got this filled for $1, I would try to take this trade. My pin price would be $24 higher. Expected move is 17. Two ways to play this. There's two trades I'm thinking of. So if I had a $24 move on a 261.28 stock, that's giving myself about a 9% move. Okay. Excuse me. The other side of this would be, I mean, I can iron fly this thing if I were to sell, and then buy 10 wide and 10 wide. You're on camera. Hang on a second. Okay. So if I want to go right at it and say, I don't think we're going to have a move outside of $14, I can take that trade. That's a bit more risk. I think it's better to take the butterfly. So I'm going to go butterfly, put this thing at the expected move. I wish the strikes were a little bit more precise. This is one thing I've been noticing for some of my trades is I'm not getting the precision in the option strikes that I want. 5 wide, that makes it a little bit more challenging. So anyway, if I did like a 285 and I do a skip, so this would be risking 476. If I want to go a little bit wider, risking 1,000, that's a little bit too rich for a little earnings play. So I'm going to try to get this trade to fill for, I'm going to go 90 cents. 90 cents credit. This will be after earnings. So do we have like a $20+ move to the upside, and then do we fade? Yes, no, maybe so. So I'm going to try to take this trade. All right, so I'll throw this in for Pulver alerts. Here's what it's going to look like. Let's go option strat. I'm going to build out a butterfly. So this is AVGO for the 6th expiration. So the 295, 285, and the 280. So I'm buying the 280, selling the 285, and then selling or buying the 295. So range is here. Apply volatility is about 114%. Wow, that's quite high. So this is what the trade would look like. So it shows I can make a whopping 22 cents on it. I'm not going to take this trade for right now. I want to see if this can go up a little bit prior to earnings tomorrow after market. I want to see if this will get me filled. I may accept 50 cents credit on this one. If I get 50 cents credit, I like the trade. But what this does is this allows from current price about a $24 move. Okay, a $24 move, which is about 10%, all in a day. So if I really wanted to like take one deeper dive into this and see like how good of a probability is this trade, I would take this and go into the post earnings. So how many times in one day do we move over 10%? And you can see that it can happen, right? It can certainly happen. So in one day, so we'll mark this out right here. 8.6, 24, 10, 12, 6, 2, 5, 2, 5, 2, 1, 2, 3, 8. So most of the time we don't go 10%, right? Most of the time we're only getting about a 1 to 3% move, and then it gets juiced after the fact. So for me, the probability is I don't think we're going to go 10% by Friday. If we do, then I'm probably going to take a small loss on the trade. That make sense? So the other way to trade this would be maybe going out a week and see does that fade. We go from 24% and then we rip up to 30. So it's like there's still follow through. We go to 10% and we fade back to 3%. We go to 12%, we go to 16, 22. It's like there's potentially follow through, but most of the time we're not moving 10% the day of or the day after earnings. Okay. All right. So I'm looking at a 285. 285. So we'd have to have about a 9% move for my trade to be threatened. And I mean, also the reason I'm taking that trade is this thing erupted higher, little bull flag erupted higher. Are we overbought? Yes. Do we show divergence? Yes. Do I think this goes up higher? It's possible, but I think that would be faded, So I don't know. I'll take a chance. Trade is in for 90 cents. It's pending. It's not filled yet. It's only offering about 22 cents for today. So this trade may not fill. If we're coming into earnings tomorrow, it may not fill, but it's okay. The other way to take this trade, I'm like, I guess if we did, this is one way I would consider it too. If I don't get filled on the earnings trade that I just put in, if this goes higher, what I might end up doing is some type of like call condor, which is a fancy way of saying I think that this market gives me like a trap here and then takes on some risk, but I don't think we're going to necessarily go too much higher after even an earnings pop. If we go earnings pop higher, I don't think this goes too much higher. Because all of a sudden Broadcom's going to be like, oh, this thing's up 90% since April lows. Not a lot of stocks have done that. You know, like I don't know. I guess you can thank Nancy Pelosi for having the stock rip because this is one that she was actively participating in. You know, you found out, ooh, Nancy Pelosi bought Broadcom during the CHIPS Act. Well, it seems to be doing pretty well. So anyway, we'll see what happens. All right. What else? I got some trades to price out. Want to get some MicroStrategy in. I've got to price out some trades from one of my services, Pinch Point Scanner. Found some good trades yesterday. Looking forward to doing the session with Nick for the mid-year review. Got that content ready. Lots to discuss. If somebody asked about Ethereum earlier, we'll do Ethereum. I mean, Ethereum to me is like it's just a bull flag. I mean, if you like Ethereum, I'm more Bitcoin. I was Ethereum back in the day, 5-6 years ago. I liked Ethereum, kind of had them play parallel to each other. I had my ups, I had my downs, but I like Bitcoin a lot more. I think Ethereum has the potential catch up. I like that trade. I was in Ethereum like literally, through this rip, but as it declined, this trade got me in some income. Like I had lows in here with some ratio spreads. That little pop back up there made me some money. After that, I said I'm not going to trade it. So now we're on the right hand side of the trend line. I mean, it looks like a catch up trade. I mean, it can consolidate a little bit. If it pulls back, it's understandable. We don't take out the swing low. It's like this to me looks like a really nice swing trade. So just as a trade, it's sitting above the 200 moving average in a buy zone, a little pullback, buy the dip, see if this thing wants to catch up, get back to these highs. It's not even at all-time highs, by the way. That's like the big catch-up trade would be up above 5,000. So I think from a technical standpoint, like it does have good potential. I mean, it has good potential. There's all-time highs. There's a swing trade risk. If you're buying small in these two spots, I mean, your risk is there and there, a lot more potential reward on either side. So if you like the trade, I still like the trade. It still looks good. Position on Dell, I do. I've got some ratio spreads on Dell, I believe. Yep, ratio spreads. Currently up about 23% of that max credit. Again, way out of the way. A lot of my positions I'm positioning for, a lot of forgiveness, like margin for error, a lot of forgiveness. I was doing a lot of premium selling during the April sell-off. So yeah, Dell's one of those trades. So Dell is right here. 113. My margin for error is we could drop all the way back down to April lows, and I wouldn't really have any risk. So I mean, that's what I'm doing. Do I like it a ton? I mean, I don't know. I mean, Intel is another one. Intel's trading at $20. Is Intel going to be a stock that comes back to $25, $26? I hope so. I mean, I have some shares. I've got some collars. I need to do something to lower my cost basis, but my break even is about $29 or $21. So if it gets up to 25, 26, I'm taking profit. I don't need to hold this thing forever. Is Intel going to return into the fold as like this, behemoth chip maker? Maybe. Are they going to be a prime competitor to NVIDIA? Maybe. But until then, like, why are other chip makers crushing it right now? And this one is the same levels we've seen since literally the dot-com bubble. That's insane. But if you look at the fundamentals, I mean, Intel looks pretty good. It's certainly cheap. It's just, is that going to be looked at as a value play? Doesn't really have a lot of risk fundamentally. That's good. Price to earnings, totally reasonable. Price to sales, really reasonable. Fair value, I mean, it's way undervalued. I wouldn't mind seeing that, right? So, but am I going to hold it? Probably not. I'm happy making $5 a share on a stock like this that's consolidated for a decade. It's like if we go $5 in range, I'll trade the lows and I'll get out of the range highs. All right. Anything else? Think that will maybe do we have anybody else coming on? I took over after James. Anybody else coming on, or am I the closer today? Chandler and Co. We do some more currencies. The closer. All right, got it. Let's see here. Let's go market breadth for a second. Just curious. So it wasn't that long ago. This is just a few days ago. This would have been March or May 20th. I did look at some ETF. If you go to ETF.com, there was an interesting print. The last couple of weeks have been ETF outflows. But we did kind of peak here. We're about 81% of S&P stocks are above the 50-day moving average. We are now still like less than half the stocks are above the 200-day moving average. Nasdaq, we got a lot of stocks now. 82% of Nasdaq stocks above the 50-day, and about 60% of Nasdaq above the 200-day. So I mean, Nasdaq has been performing better, a little bit more reflexive and resilient. It was hit worse in the sell-off. I mean, it was down 27% from peak to trough. But I just wonder. That's why I pose this question: are we going to hit all-time highs? We're going to fill that China-U.S. trade agreement gap. Because if there's time in this market, maybe nothing matters. Now that it's summertime, maybe it's just drift. Maybe it's path of least resistance. If we get up here towards a market breadth top, then that's maybe the timing, right? Maybe. But I also go back to, I'll wrap up with this today. This trend line is something we should definitely pay attention to. Okay, that connects the April 7 bottom with the pullback here from the 21st, and this market has just been like, I'm not going to say explosively higher. It's just been steady. It's just been steady. It's been a recovery. It's been repairing itself. But like I said, time can get us on the right hand side of this trend line, right? And time and price can play a lot of funny games. I mean, we could go sideways here, and price can go up and then fall, right? I'm just saying, like, don't overlook the fact that if we get on the right hand side of the trend line, the bears that have been possibly waiting or maybe even interested for confirmation are possibly going to get it. So the ways the bulls can stay in control is just by keep grinding higher. So if this trend line holds, it holds. But if the trend line gives back or breaks, I would think we have easily 3-5% corrections, maybe 5 to 10% corrections, and things might get a little gnarly. But until then, trend line is what it is. Like slow and steady. No major news. I mean, today we got through ISM, we got through ADP non-farm. We have the real non-farm on Friday. We have ECB tomorrow looking to cut rates by 25 basis points. We'll see what that does to the currency. I'm going to see if that DXY wants to tap those lows and my euro dollar wants to tap the highs. So hopefully I will be closing out for. That's why I had the chart. I'm set at 1500. 1500 is good enough. Okay, I've got it set at 1550, but good enough if we tap the round number at 1500. Okay, one last look at currency strength. It's just dollar. Dollar's getting beat up. I put in that trade on AVGO. It's a pending order. It hasn't filled yet, so maybe it doesn't fill by tomorrow. It's got to be filled by tomorrow because it's after market tomorrow. Okay, what I know that I don't want is I'm not like buying premium on that stock. There's just way too much expected movement. So, all right, and then for today's short-term price action levels that I'm watching, I think we are going to try our darndest to maybe sneak up here to this like 59.95, 6,000 level today. I can't believe I've got this like little SPX butterfly trade that hasn't closed out yet. Like, I mean, it's sitting at, it's within about, I mean, I guess it's because it's 5 points on my strike, but if we go up to 59.90, 59.95, tap 6,000 today, like this should be hitting some profit. Come on. It's literally sitting right there. Like it's sitting, hovering around my mid price to close out. Like, why wouldn't it close? Maybe I might have to hang out in this trade until maybe noonish. So in the next like 45 minutes. So anyway, what do you think of Elliott waves by means of analysis? Here's my Elliott wave. I'll do it in 2 minutes. Here's what I like about Elliott wave. It's got to be super obvious. Okay. If I can go 1, 2, 3, 4, 5. Or we'll go 4, 5. Kind of picture perfect Elliott wave. Okay. Number one, to me, if I'm saying this is a wave one, it is a major, major, major low. My favorite trade is participating in this, buying the pullbacks of wave two to participate in the run of wave three. So the way I make the most money with Elliott wave would be this. If I'm participating in number one, if I'm finding this low, I can participate in that for a pretty good swing. And that swing might take out previous highs. And so that's kind of my way of doing it, right? If we get a swing that takes out previous highs, that's when I'm taking profit on wave one. Then I swing trade by leveling into wave two and try to get as much of that symmetry as I can. If I really like the trend, then usually through wave 3 and 4, I take profit at symmetry, and then I kind of dollar cost average back into previous highs becoming support, and then a wave 5. Wave 5 is like the slowest wave. It usually is the slowest wave. It's still steady. It's still a bull trend, but it's not my favorite. So most money I make is going to be wave 3 symmetry, right? I find a low or bottom, then I can participate in wave 1. Wave 3 is my easy, like strongest trend in the market, biggest impulsive wave you get. And then wave 5 is, you got to be ready for wave 5 to be, okay, it's going to go a little bit higher, still participate in the trend. But then also, as far as the turning points go, I like selling wave 5 tops, right? So this is, if I look at Elliott wave, this is how I trade it. If I can find a low and participate in a wave 1, that's a pretty good trade, right? There's some momentum there that creates an impulsive wave. You're looking for the follow through to get symmetry. I make the most money on these two sessions, or these two sections. Finding a bottom wave 1, participating in a wave 3, and then after this trade is done and exhausted and overbought with crazy amounts of divergence, then I look for a simple ABC correction, like a 1, 2, 3. That's about as simple as I make an Elliott wave. If you try to show me a chart that's like, this is Elliott wave with like a little Roman numeral and a sub count and lowercase letters and capital letters, I don't care. Like, I'm looking at it from a simple 1, 2, 3, 4, 5 in an ABC pullback. That's it. Like, I don't want to make it any more complicated than that. I can see that. And if you can't see that, and you got to make up all these sub waves and it becomes very subjective, that's not Elliott wave for me. To me, this is just, it's 1, pullback 2, push 3, pullback 4, push 5, 1, 2, 3. That's Elliott wave. The way I make money is there, there, and there. So I'm not participating the entire time. There's obviously like a time and a place to do it, but it's plenty lucrative. Okay. Is it in the stock market? Yep. Is it in futures? Yep. Is it in Forex? Yep. You can use fibs along the way. You can do all sorts of stuff. Okay. Tried it on DXY wave 5, maybe. Well, where's your wave 5? So let's go weekly chart. So where are you going? 1, 2. I mean, I look at this as potential symmetry. That's what I'm seeing. So I look at wave 1, 2, 3. I mean, that symmetry, I have that. I already have it noted. I mean, our chart here. What workspace am I on here? I need to go back to the SPX here. SPX on the 15-minute. There we go. There. I'm going to go back to DXY. I've got symmetry noted. So this box is this is actually my wave 3 symmetry. So high to low. This is all choppy. Wave 2. If this is wave 3, that's symmetry. So around 96. And again, I'm not claiming to be like this Elliott wave pro. I mean, some people would take Elliott wave and make it look ridiculous, and maybe they're better at it. But I do like symmetry in the market. I think that the market is really impressive sometimes when you can measure a move, project that move, and it hits it. And that's oftentimes, a lot of times, my profit target. And it's easier to hit. Like, symmetry is easy to hit. If A to B equals C to D, it's just math. And it's funny how that stuff is kind of self-fulfilling. Okay, use the day chart. Gotcha. I mean, I'm on a day chart too. I just have it compressed. Where are you starting? Are you starting from this high or are you starting from this high? I don't know. And this is what makes it confusing because it could be super subjective. Your starting point, my starting point, your sub waves is like, it's all different. That's what I don't love about LA Wave. It can be very, very unique to the user. So I try to keep it as clean as possible. If it doesn't look obvious, then it's not really an LA Wave to me. So you started here back in September 2022. Yep. Okay. Fair enough. All right. I'm going to wrap up for today. I got to jump on the road here for a few minutes. I'm coming back. I've got sessions this afternoon. I want to get some trades running on MicroStrategy. Got to price out about 4 or 5 trades today, see if I can take them and look for those in the Pulver alerts. MicroStrategy is going to be a bit of a campaign. It's going to be pricey. If you want to take that trade with me, I'm probably allocating about $37,000 to it. But I think it's something I could generate probably $2,000, $3,000, $4,000 to make some income and also have some protection. So if it gets a little crazy the downside, I still want to generate the income, but also have the protection. That's why I'm not just going to go out week to week. If I was just going to sell a call, actually, you know what? Maybe I'll do this. Maybe I'll buy a put for a week and then sell a call out maybe 30 days. Actually, I switched it around. Buy a put out about 30 days or 45 days and then sell calls every week. Premium should be pretty good to do that. But then I just want to see what the numbers are. Okay. All right. I'll let you go. Have a good rest of the day and see you soon. All right. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.